Great afternoon. This is a beautiful Saturday afternoon, and it's wonderful to time for us to sit down and do the end of week review for this week. And welcome to the end of week review for this week, which is week 38. We are in week 38 right there, and one more week. We will close our one more week we close out the quarter three right here. The following week after next week it's gonna be a overlap between October and September and October. Anyway, this week is FOMC meeting. It's beautiful move. Always a lot of action in the week of FOMC meeting, and it happened when it happen every day, not every day, but every month. But some month the FOMC is skipping, and normally they do on Tuesdays and Wednesday. They come out with a decision, and we did trade on the Wednesday, and the price action is so beautiful. We learned a huge lesson how to trade in the FOMC meeting. You just trade the reaction of the price action. There's no bias. Yeah, you can say no bias, but at least you know how pattern, how the liquidity runs, so that gives you some clue that where the market or where the price action gonna takes place. So this week is a FOMC meeting with 38. And we have a lot of action. The Monday is the day that is set the range. So if we look in here's our daily time frame. So we mark the Monday of all FOMC meeting week. We want to see what is the Monday range, candle range sets the tone. And you can see it is set the tone right there. Let's say for this week, you see that the Monday range right there. And here's a very beautiful setup. If you can see, here's how we look at that. Yeah, so we make it bigger, so we can see. So this is the Monday of this week, September 15. So it's set around right there. By the way, it have an open gap, a huge open gap right here. It's about 54 point right there. Yeah, 45, 54, around there. That's the huge gap. So the question for us is, if it's gonna fill the gap or not. And we see that on Wednesday, it did fill the gap, not completely, but you see that. So for the Monday, we highlight the high and the low. The high is the buy side and the low is sell side liquidity right there. So after the Wednesday, we have two scenarios. You see that it tests from below twice, 1, 2, 3. So it may break, but also it tests from above right here. It's a huge test from above for us right there. See that test from above right there. And also we see that after the Monday, we see Tuesday, it did take what? It did take the buy side liquidity, the high of the Monday range, and on Wednesday it take out the low, which is the sell side liquidity right there. So it's take liquidity for both ends. And then on Thursday, we have the scenario, either go up or go down. So what the clue? So we're going to do a deep dive to see what the hint or what the clue that market gives us to trade on Thursday. In this week, we trade all 5 days, right? After we blow our account in the first week of September, then we just trade without any fear. So that's where And we can see that as long as we trade without much concern about the P&L, then is we just focus entirely on the prior action instead of concern of P&L, and that manifests itself in the performance. We trade really well. So that's the lesson we learned. So you can see that it can go both ways, but likely the market give us some clue what happened. It gonna how this gonna play out right there. One of clue that you said at that level, if we open above this level, then it tell us likely it may go up instead of going down. That is one of clue. Or if we drill down into the lower time frame, in this case is our favorite time frame, which is the 50 minutes. It also gives us some clue. But also right here, after this trend, you see what the pattern. You see a test from below, break and reverse. That is the type 2 reversal. However, it did not happen. For sure, we did trade right here in overnight. We anticipate that it's gonna hit it level. It did, but we was stop out because we put a stop loss a little bit too tight, and we got stop out right there on Thursday evening or Thursday night when it go into Friday. So let's go through see. Okay, so for this week's FOMC meeting, the prior FOMC meeting is take place in July. There's no August. So, you see that it set the range right there. It tells us what's gonna happen. As soon as you see the range there, you see that it break, reverse. There's no way for it to come back here. The only way it come back here is to break the level, and you see that it reached with the high, which is the buy side liquidity before it's breaking down. So the range can give us some clue right there how to trade on that week. Look at this FOMC meeting took place in June. So you see the Monday right there. So you see that right here, it did not take the buy side. So it tells you that, look, the upside is not finished yet. And then because this one is maybe the holiday somehow, it only have 4 trading days, right? 6, 17, 18, is that 18? Oh yeah, so it does not have a 19. So the Thursday does not happen. It only have Friday 20. Yeah, go back to the chart to see what happened around June 16. So we have some clue right here. June 16. Where is our June 16 right here? Yeah, so the 19 is the holiday. Yes, the holiday right there. Oh, June 19, yes, it's the holiday right there. So we only trade 4 trading days on that, and the FOMC come right there, and then the Friday is the 20 right there. So you see that, then it tells you what gonna happen. So you have a test from below, and this one is just flip, right? It looked like it's gonna break, but it don't break, it just flip. As soon as it flip, you know that it's gonna reach this high exactly the Monday, and then the Tuesday following is break. So pay attention to the range. Okay, so here's on FOMC meeting took place in May this year. The range is very tiny. You see that? So the whole thing is consolidated right here. And as soon as you see test from below, and the Monday after that, boom, it goes into the Monday, it really break up. Yep. Go to, yeah, right here, interesting, huh? It's the range, and then it go up that range, and it break that high range right there, and then boom, it's going down. This one is happened in January. In January, it start with a huge rain right there on a Monday. See that, and then 28, 29, 30, 31, and the holiday. So that's the reason why Friday is holiday. Then it's go to, and you see that there, it did revisit the low range there, and it did not break it. So that means it's moving up. But let's see. So basically, it gives us some clue how to trade again that level, but there's no, pattern, or maybe a pattern, but we don't see. Yes, but that's the whole idea. So January right here. No, that's 24. So the candle range for the Monday, it gives us some idea. In this case, you see that it break and it reverse right away. In this way, it tests from below twice, and then it break it. Yeah, right here, expansion and right there. You see that break, test from below and reverse. That's it, the type 1 right there. Yep. Maybe this level. Anyhow, let's go to this week, how it's open on Monday, and then you can see what lesson we learned for this week. So Monday is really open gap right here. You see that, and that's our Monday right there. That's the Monday, and then you go to Tuesday, and then right here is our Wednesday, and when the FOMC chairman come out, and they have a press conference with a cut rate a quarter point right there, and we trade it here beautifully. We trade beautifully. We will go to our trade right there. So it did fill in the gap right there, and then boom, it reversed. But very interesting to see how next week it's gonna come back to this level. Or not. Very interesting. You see this level is the key level right here. See how it's gonna come out for next week. See that? That's the level exactly. That expands to 19. Yes, so you have the level right there. And you see the reverse from that level. It happened on Friday. See that? Okay, let's go to the Monday. So here's the Monday, the beginning. Beginning of Monday, we see the gap up right there. So we check this screenshot. It is the weekly on the left and Monday is on the right. So you see that the last 6 months, 1, 2, 3, 4, 5, and September. It is, let's say it's December, is up close. Then you have 6 months in the row that markets close up. So very strong rally right there. Here's how it looked like on the daily time frame. So that's opening gap right there. And here is look like in the 15 minutes. So right here is the Monday. See the opening gap right there. Huge gap up. and here's the closure. So you see it's opening gap, huge gap, and it take out London high right there. And yeah, let's watch the tapes on Monday. Alright, now look at the recording we have. So this is the 9:30. It's a bullet right there. You mark the level, test from low, so break. Let's see it's gonna reverse from here at 11:15. Alright, let's continue rewind the tape to see what opportunity we have right here. So we are right at the 11. Let's see how 11. Okay, so now is 11:50. What do we see from here? You see that the logic candle right there? You see that it break it, test from above, so it may reverse from here. Here's what we mean right here. So 11, is that right? Okay, where is our screenshot? Oh yeah. Alright, let's pull our screenshot. So here's what we mean right here. Now let's open this with a different app. Yeah, open this, snip into right here. So you see the expansion move right here. And let's make this right there. See that? So basically you have break it, test from above, twice. Let's see it reverse, right? Let's see it reverse from there. Let's see. Yes, it does. You see that? Wow. Yes. Let's see. Oh, it's gonna make another leg up. Oh yeah, right here. You see the pattern right there? If you don't go here, then go here is still a better move. Much better. So that mark that you're gonna see right here. So it's at 12:45. At 12:45 we have a better opportunity than at 11:15. That's right. That's better opportunity for us. So right here, what do we see? So we do see something very interesting right here. So right here you see the break right there, right, and you have favorite gap, and you mark this level. What do you see? So as soon as it breaks this level, boom, it's gonna make a next leg down. It's the first leg down, and then retracement, that's gonna be next leg down. It's happened all the time right there. So let's see how it's play out. So don't need to be hurry. You see that? Yes. It's going down right there. Hold on. We need to make it faster. Yeah, you see it going down. It retrace again. Let's see. Yeah. But let's see, it going down. Okay, so it take the low of this candle again, take the low 2 times, and it did take the low of this candle, right? So you see that candle range right here. It take the high, and now it's gonna take the low. It did take the low. Let's see it rebounds from here. Let's see it rebound from here, or it continue to go down. Okay, so let's see. come on, hesitate, and then okay. So see, it sweep both the high and low, and then it go back, sweep the high again. So it's very range day on Monday. Yeah, let's see. It's very range day on Monday. Yes, it. Wow, that's it for Monday. You know, if we look closer, you can see that range right there, right? First, you take out the high right there, it make retracement, boom, make another leg down. We take the buy side right there, the low, and then I take one more, revisit level one more, close, and then boom. Right here, you have a setup right here. Just look right here, we have a setup. We have a setup right here, and this is a type 2 reversal that we are talking every week, every day we see. So in here, if you mark the low of this this expansion move right here, or displacement, what do you see? Test from above, break and reverse. That's it, the type 2 reversal we're talking about, right? That's it, the type 2 reversal. Actually, we call it for breakout type 1 and type 2. So the type 2 right here is the long setup. Test from above, break and reverse. Mainly the type 2 is fall into the continuation and it form during the retracement, and the type 1 is likely in the reversal. So in this case, we have the first leg up, and this is the retracement, and it continue to go up. So this is the type 2 right there. This test from above, break and reverse. How beautiful it is. And here we have a double bottom right here. If you look carefully, you see this level, break, reclaim, break, reclaim twice. So that you have a type 3 right there. That's we call type 3. I believe that we do have that type 3 right there. Yeah, we call it double bottom at the top right there. So basically you have break, reclaim, and break and reclaim. So it's kind of overlap those two model in there, and the more you have a confluent, the high probability the setup is forming. Okay, so let's go into the 15-minute chart. We do a write-up for this setup. Okay, go to our 15 minutes. So right here, this is the Monday. Is that right? Yes. So right here, so it's your first leg up, and it's gonna be continuation, likely continuation, and you're looking for the type 2 setup. See that? Test from above, right, and then you break and reverse. That's the type 2 we're talking about. And right here it also give us another a setup right here also, which is double bottom right here. It's kind of overlap. So let's do one by one right here. But first let's mark down, this is the 930. The 930 very very critical range for us. So it's a 0930 when we don't see the setup forming, then don't trade. The whole idea of a trader is to wait, not to trade when the setup is not there. So keep in mind that this one type of from above, it doesn't break right away. It takes a couple of candle, 1, 2, 3, 4, 5, and then boom, break it and then reverse. So a little bit different on our setup. We want it to be happen right away, right after that, but it does not happen because the condition is that on Monday it moved very slow after the first leg up open gap, then it not enough liquidity to make a quick move, so it kind of consolidate and then boom, it make the move right there. So let's check this screenshot right here. So yeah, let's get one more time frame, which is what the reverse right here. Okay, 14:45, which is what, 2 p.m. 2:45 p.m. 14:45. That's where the reclaim or reverse happen, right? That's from above break and reclaim right there. 45. Okay. So now we can get ready and take screenshot of this and put together a write-up. So now we do this column. So basically you have test, and then you have a break. It's very classic, and reverse. 3 step right there. The very first step is gonna be is test from above, and then the second step is break it. You want the break and reverse happen right away. The distance between the first and the second can be variation, but the distance from the step 2 and step 3 have to be right away for it to be a very high quality or legitimate setup. The reclaim right here, it have to happen right away. If not happen away, then maybe liquidity not enough to reclaim. That's the beauty right there. So the reclaim happened at 14:45. Yeah, reclaim 45. The break is happened at 14:30, right? At 14:30. Yep. So you have test from above, break and reverse. That is the type 2 in this case. So it's a 4 breakout type 2. In this case, it's a continuation. Continuation at 14:45. A continuation is the trend right here, right? The first leg up, and then right here is the retracement, and then boom, it continues to go up. So very easy to identify. So test from above. Second, you break it, so it's break at 14:30, and you want the next candle to be reclaimed right away. the step one and step two can be way longer. If the liquidity is not there, then you wait a little bit longer. But you really want step 2 and 3 happen right away. And it reclaimed at 14:45 right away. Put a note right here. So distance, right? This distance between one, like step 1 and 2, might be more than one candle, but as for step 2 and 3 must be right away. It has to be right away. Yeah, want it to be happen anyway. In order for it to be a high quality setup. Beautiful design right there. Yep. So that's the node we had set up for 4 breakout type 2 happen on this Monday at 10:45. That's right. That's right. You see another setup right here, but we will go into that later. Okay, we will go into it later. But this is a very high quality setup right here. Alright, let's save this. Alright, we just saved this setup type 2 4 breakout right there. Continuation. Now let's do the type 3, which is a right here, which is break, reclaim, and break, reclaims. It's a double bottom or double break and reclaim setup right there. Alright, let's do this so we can see the beauty of the setup. Excuse me. See that? That's where the beauty comes from. Yeah, this one is so not much clear, but it's similar. Like that's the beauty. It always happens after the expansion move and you have a decoy candle or dozy candle, for that matter. So in this case, the low 69.25, right? That's twist 69.25. Yes, perfect. 24.25, and make it just a little bit different so we can see. Yeah, just the whole idea. Break, reclaim, and then break again and reclaim, and then it test above, boom, flush. So if you catch this move, is still a very good move. If you catch this move, let's say you are reach how many? Yeah, 5, around 5, right? This level, right? 5 point, and then you get up here. Up here, you have 1 to 2 risk reward ratio right there. But anyway, let's see let's do a write-up for this setup. Type 3, we call it type 3. It's also a 4 breakout. Right? Type 3 also is 4 breakout, but it's type 3. Let's open this with a snipping tool so we can do the write-up with the arrow. Right, so always watch full for the candle after expansion move. You can see that. So if you have break, you have breakland, and right here you have break again, right? Break again, and then you have reclaim. So it's a double bottom or double top. So double break and climb and reclaim pattern like that. So basically you have break and then it's reclaim. There's a distance between the double, right? Distance between them. Right. Step 1 and step 2, you want them to happen right away. Reclaim. Reclaim. And then you have right here number 3, you have break, and then you have reclaim. So that's the idea of double right there. 4 is reclaim. Okay, and we call this is a 4 breakout type 3, but 2 thread, and it's a double because double bottom pattern, right? Double bottom pattern. But how about double top? Then we may say it's the double break and reclaim, right? Double break and reclaim. This is double break or reverse right there. And reclaim, double, yeah, double break and reclaim, double break and reclaim or reverse like that. So basically, first you break it, second you reclaim, you want these 2 steps, happen right away. But from step 2 to step 3, you may have a distance, a couple of candles, depend on the liquidity. And then you break, and then 4 you reclaim. So that's right. Yes. No, there's addition. There's addition. Addition between 2. Step 2 and 3. Yeah, we see that a lot. Yeah, here's a sample that we see. You see that level or double break and double right there. So let's say this level is break. This is a double bottom. It's break, and then it reclaim and it break. No, that's use this level, right? Break, it reclaim, you see that? It reclaim, and then, let me see, double bottom. Look at this symbol, it's more clear. You see that? Look level right there. It break, reclaim, break, and then reclaim. So that's the double bottom or double top or double break and reclaim for breakout right there. But if you look carefully, it's overlap with the, for this, in this case, overlap with the type 1 right there. Break, touch from below, and reverse. We saw that a lot. Yeah, here's another example. It happened recently, September 12 right there. It's very clear. You see that? Break, reclaim, break, and reclaim. That's the double bottom in this case, or double break and reclaim right there. You have two bottom, 1, 2 right there. There are distance between of them, but for the break and reclaim, you want it happen right away. So let's go back to ourselves today. Yes, so yeah, you can say break and reclaim, or another word for double bottom. That's a very common term people use, double bottom in this case. And reclaim. Yeah, there are some distance, right, between step. Basically, you have to wait. But for the break and reclaim, you want to happen instantly, right? The candle, you know, the following candle, you want to reclaim right away. All right, let's say this one. Yeah, here's another example happened recently at September 12th. You see that level right there is the key level because of the candle after expansion. See break, and then it's reclaim, break, and then reclaim. For the second bottom, or bottom number 2, you see the type 1 right there. It is exactly like today. You see right there, right here. Now this one is not type 1, but the other one is have a type 1 reversal. Like this one, you have a type 1 overlap right there with the bottom second have a type 1 reversal. Let's see if we have another one. Yeah, here you have so many, you have the same idea, break, reverse, reclaim right there. Here you have a similar scenario. You see that break, and then you reclaim, break, and reclaim. Beautiful right there. So that's type 3 right there. A little bit complicated in the sense that as you compare to type 1 and type 2. Type 1 type 2 very simple, but the type 3, it happened when the market's likely in the consolidation mode. It don't have enough liquidity, so you have to do a couple of break and reclaim in order to jam the liquidity, or in order to trap liquidity before it make the explosive move. So that's the nature of the setup behind it. Yeah, that we see right there. All right, let's see. We took the trade on Monday. Let's see how we do. All right, here's the trade. I think we may take the trade, but let's take a look. So we check green side is the 15 minutes right there, and the time is 10 Eastern time. So you see the huge move right there, right? That is the 9:30, and then boom, 45 expansion. So we take a short right here. We thought, okay, is so-called test from below, break and reverse. So that's how we took the trade, and let's see how we. So we add more contract in there. So 2 minutes into the candle at 10, and it gives us some early profit right there. I think we did thinking about take profits, but anyway, we let it run. Wow, it goes up to 1,000 right there, and then boom, it reversed back, and we are in loss right there. Boom, we take it out. So that's the first trade we try to short right there at 10. And then we say, oh, that level, you see that? Break, reclaim, and then break again. So let's see. We say, okay, let's short them again. I mean, the first trade is basically we need to patient. I think the first trade we took it too early, no pattern, the same idea right there. It take it out right away. But the good thing is that we just try with one contract. So yeah, the first trade we swing a little bit too hard right there, and then we go short again. And this time, you know why? You see that we say test from above right there, but we learned the lesson. If you see a lot of back and forth, break and reclaim, then this will be not a good setup. The minute we pull a trigger, we think, wow, it may not work out. So that's the lesson we learn. You know, sometimes it's not about pulling the trigger, but we have to patient wait for the setup. But anyway, we trade so we can learn ourselves right there. You can see, but it goes into our favor. You see that? And but if you mark this level right here, you see that? It break, test from above and reverse, so we should target the low of this candle. Oh, now I see the reason why we took the second trade. Second trade is much better. Wow, from 3,000 put into, wow, interesting, huh? I think we did take the profit right there. And then we add more right there. Let's see how it's play out. But this 3R right here may not happen. So let's see. Or must be at the low of this candle. And boom. I think we check the loss right there. We scale out right there. Yeah, so that way we take out. But actually that's the minute we need to go in. You see the level right there? As soon as above that level, you can short them. Yes, that's one of the pattern that we see right here. You mark this level right here. You see that? The minute it break, here is the type 2 reversal. Yeah, we almost forgot that. But I'm glad that we remember now. So look at here. It gives you a very beautiful setup right here. What do you see? You see that it tests from below, break and reverse. That's it, the type 2, right? Type 2 break for breakout right there. So let's do this. So the low of this is what? The low of this is 66.78. 66.78. All right. Yeah, exactly. So you see that at a minute, it tests that level, tests from a break and reverse. But this got a little bit tricky. You see, it still go back to that level. It's insane, but don't. It tries to set you out your position, so don't just hold on. Right? The market tries to set you out. It's supposed not to be go back to the level, but it tries to set you out. But as soon as you see the gap right there, you know that the algo leave behind the fingerprint right there. Yeah, that's beautiful right there. Okay, so let's do this setup right here. So you have right here is what right here a 12.50, and that's where it's happened. 12.50. So we do have a setup right here at 12.50. See that? Test from below twice. You see that? 1, 2, 3, break and reverse. Yeah, twice in this case. This one have to be top. Alright, just that's the type 2 right there. So yes, it's right here. It's the type 2 4 breakout right there. Test from below, break, and then it reverse or reclaim at 12:45, which is the trade right here. We should recognize that instead of get out, we need to get in right there. The minutes that is it reversed the candle right here a little bit tricky right there. It's not supposed to go that way, but it tried to check it out before it going down. See that? Right? You see it flip. Yes, so it's beautiful that we wait for the flip, then we go all the way in. We see that, we know exactly. As soon as we see that, we're so surprised. Wow, why this candle go there? It should not go to that level. It should not go to that level. You see that? It did go there and flip. There's no way it should go, but go there to check out the people who try to go short too early. So we wait for that, and then boom, we know we go all the way, maximize our side with shifting contract. Yes, so we aim at this level. Is that right? Yes, the lower range right there, and it did hit the level beautifully. You see that? It hit there, and we hold another 5 contract right there, but it looked like it not go into our way, so we take the profits. We get out beautifully. That's it. And then right here we see the level right there. We short them. Right, we mark that level. You see that break, and reclaim. So it's gonna be a type 1, or it's type 2, especially test from below, break and reverse. So we engage right here, and we add 10 more contract, and we see the level right here. We say, okay, maybe it go here. Right, so let's see. Wow, so we're thinking that it may revisit this level. So we put the target right there. Let's see. We see that it not hit that target. Wow, it did go back to this level again, the low of this candle again. Boom, we take out the profit right at 10. So basically we anticipate it go back to this candle range right there. That's the reason why we move targets, and then boom, I think we take out the profits right here. So we know, now we know how it moves, right? Even though we make a mistake in the first trade, but the rest of the day, we really see the pattern. We really see how the liquidity run. So around a range level, above the level, you see the pattern show up, then boom, take a trade. That's beautiful. All right, let's now go to Tuesday to see what we learned from Tuesday, and then go to Wednesday where we trade live right in that OMC meeting. All right, here it is on Tuesday. We have a beautiful setup. It's a 4 breakout type 2, and keep in mind the type 2 always happen in the continuation. Basically you have a first leg down in this case, or first leg up, then you go into retracement, and where the type 2 happen is create a 4 breakout, and boom, it make the next leg down, which is what we call continuation of the trends. And keep in mind the first leg always have the fair value gap. In this case, you see that at the fair value gap down. Just recall on Monday we have a similar setup. It's the first leg down right there, but in this case it's kind of very compressed, so it's very hard to see, but it's similar. If you had the first leg down, you see the fair value gap right here, it's not completely failure gap, but it's called implied fair value gap there. So it's not reliable, but you want it to go back to that gap, and where you see the test from below, break and reverse, that is the second leg down we're gonna taking place. So you're gonna do that. But in this case, it have first leg down right there, but this retracement did not go all the way there, but it's stopped right here. But you can see, and keep in mind, in this case, it happened at 9:30, where you have a lot of liquidity. So you see that at first you look like, oh, maybe that's right. You see that we just reverse engineer right here. Maybe at that moment we don't see it yet, but right here you see that level right there. The closest candle is a break, text from below and reverse. You see these two candles right there at the 9:30. In this case, yeah, exactly. So you want it to what? To test from below, right? You want it to test from below, break and reverse. Test from reverse. So you want it to be a reverse. At first it looked like it's not reverse, but as soon as you see it flip, then you know that it's gonna, go. You know that the play is in our favor. So right after the minute, 1 minute after 9, you see that flip right there. So it fit right into our setup right there. Test from below, right? Break and reverse. Exactly. You see that? Take a break and reverse, and continue from the setup right there, and boom, it go all the way to the low range of this candle on the previous day PM right there. Yes, so basically at 9:30 you did have a setup type 2 right there. Yeah, we need to do the mark right here for the right up right here for type 2. Alright, we just make the markup much better now, so you can see that. So the right up much better. So it's a type 2 for breakout type 2 and continuation. And the critical right here is happen at 9:30. You see that? And you can see that right here, fair value gap, right? Is a clearly fair value gap. On Monday we have a implied fair value gap, so that's the reason why the Dow move is not so, the next leg down is not so big and strong. But on Tuesday you see that it's a clear fair value gap, so the next down move is so strong, especially it took place at a critical time, at a critical mass time right there at 9:30. So it flipped, you see. At first it looked like it looked like not, it keep going up right there. But if in the back of our mind we see the pattern, right, test from break and looking for the flip, looking for the reverse. Exactly, right? When into just 1 minute you see it flip right away, then that where the type 2 is in play. Type 2 is in play right there, and boom, it go down 7 minutes, and it go down hard right there. The target right there is a good run right there. Yeah, around that level, then it reverse back. So that's a type 2 reversal for Tuesday. Now let's see what trade we take on Tuesday. So that's it. When we see that it's happened at 9 minutes, yeah, we missed that trade. We didn't take that trade. But here we do the reverse right here. Basically breakdown level. We see that level break and test from below. That's type 1, right? That's the type 1 we're talking about right here. Breaks, test from below, reverse, that's type 1. For breakout type 1. So we engage right here. Let's see how it's played out first. And boom, it check it out. Is that right? And then we engage again. How happened? Oh yeah, we only take one contract, and boom, it take it out. And then we see the flip right there. We know that it's gonna come in, and that's the reason why we go in right away. We come back in right away with a big, oh, right. Oh, we go big, and then we get stop out, then we go in again, go long again, and I think we get it this time. Boom. We know that it will not take out our stop loss, then we go maximum side right there. Yeah, it will not go up there. So that's the reason why we take our profit right away. Boom. So we come back with a green at the end of the day. That's for 2 days in a row we make green. Now look on the Wednesday. We don't have a time to review everything, but look at the trade we take on Wednesday. You can see that we make a huge progress and huge lesson we learn. So here's on Tuesday, on Wednesday in the morning, right? I don't think we take any trade in the morning. We just see the pattern right there. Maybe test from below, break and reverse. So let's see, type 2, and then boom. Here's at 2 p.m. when they come out with new, and as soon at 4 minutes into boom, it go. And then we jump in right here. That's the mistake we make. It's better for it if you want to go in right away and take profit right away. Otherwise, don't wait. And if you want to wait, then wait for the first candle moving. You see that? We take a lot right away. But at that moment, we're talking to ourselves, say, don't worry about the profit and loss, to look at the price action. And right here, we see that it take out at the low. And you see a lot of liquidity up here, so we anticipate that it will reverse right away. And we're going boom, right there. We go in with maximize size right there. We should take profit when it hit right here. We thought that it may go up here, but that is the low hanging fruit target should be here. Don't go up there. That's the lesson we learned. You see that? It hit right away. We should get out of here and take a decent profits. We learn our lesson. But anyway, as soon as we see this come back, we take profit right away. We get out. Yeah, decent, right? We still have a decent profit. And now we see, wow, what gonna happen? Okay, we let that candle, close it down, and now we engage along again because we see that it rate. The first candle, right? It sweep both. Not sweep. Sweep one end. It sweep the low, which is the sell side. Sweep the low one more time, and then one more time, and it cannot push any further. Then we engage the long. So that's the huge lesson we learned. Boom, it goes to our favor, and we should aim right here. It should be aim here. Whole low hanging fruit should be right here, or right here. Don't go up there. It may not. You see that? Yes, you see that it hit that level or this level, low hanging fruit there. We should take profit right there. You see that? The profit right there. Yep. So, but let's see how we manage ourselves right here. Boom, boom. Yeah, we're going. We know that it's gonna, because that's from below, right? You're gonna break that level. But I think we aim a little bit too high right here. Aim right here should be good. Yes, so we take out. We don't want to take a lot right there. You see that? It come back, so we better get out. Better get out and lock in profit. Not bad at all. You see that? Not bad at all. We trade right into the action of the FOMC meeting. All right, I think we have a very good end of day, end of week review for this week. We're grateful for your time and interest. We always love this opportunity. So we do what we love, and day by day, little by little, in every way we're getting better. Have a great weekend, and talk to you next week. Bye for now.